Video, ladies and gentlemen, we will discuss your major upcoming catalysts this week for our markets, my expectations for them, including PPI, CPI, retail sales, and many more. I mean, this week is just a pure data dump as is, and what I think they will mean for markets, how I think they will influence markets, if we're going to go through a larger crash here, or if we could actually start to bottom and start to reverse and make some progress to the upside. We also have a big catalyst coming January 20th. If you don't know what's happening on January 20th, I don't know where the hell you've been at, but that is the inauguration. And I think we're set up positively heading into that at this point also, because there's a lot of fear out there, and it may not be initially as bad as some people expect. And we'll talk about all of this throughout this video. I will look at some technicals on the S&P and what could be coming to markets if this week is bad or potentially if this week is good. So let's start with the outlook for earnings. We are officially starting Q4 earnings season this week. You start off with your major banks every single time, but we also have some other sectors that will be reporting, like KB Homes, Monday and after hours. Tuesday and after hours, you have Applied Blockchain or Applied Digital. It's Applied Digital, but the technical name is Applied Blockchain. Wednesday, pre-market, you have JP Morgan, Citi, BlackRock, Wells Fargo, and Goldman Sachs, as well as BNY. Like, just shove all of your major banks in there, and basically big banks earnings season is Wednesday pre-market and Thursday pre-market. In Thursday pre-market trading hours, you will get Bank of America, Morgan Stanley, US Bancorp, PNC, First Horizon, M&T, as well as TSMC. Now, TSMC, this one's interesting because we had Foxconn that reported earnings way better than expected. It would be a real shocker if TSMC had bad earnings for whatever reason. That seems highly unlikely to me. It may already be priced into markets that AI is doing fine. It doesn't feel like that. It feels like the world's kind of falling. If you look at many stocks and sectors out there, it looks like we're one bad data report away from a full-on crisis in markets. But TSMC could, I think, reiterate some of the bull thesis around AI, specifically AI demand. They report Thursday pre-market. The first mega cap name that will report, the first, almost $1 trillion company that will report. Now, Friday pre-market, you have SLB, Regions, Fastenal, Truist, State Street, Citizens, and Independent Bank. Big story of this week, what is going to make or break our markets is one specific catalyst. Now, I will share all of them with you, but your one big catalyst will be on Wednesday. Starting off on Monday, though, we have consumer inflation expectations. On Friday, consumer inflation expectations via the University of Michigan's Consumer Sentiment Report skyrocketed. 5-year inflation expectations went up the most they have went up in a single, month on a month-over-month basis since 2008. Like, yeah, the whole Trump tariffs will cause inflation thing is kind of getting embedded in people's expectations. We want to see that come down. We want to see inflation expectations come in at 3%. Last month we were at 3%. Expectations are for 3.1%. So is it the end of the world if inflation expectations go up a little bit? No. If they skyrocket, yeah, people are not going to like that. By people, I mean investors on Wall Street. Tuesday, we will get PPI month over month for December, expecting 0.3% month over month. Last month was 0.4%, so a slight deceleration. Core PPI month over month is expected at 0.2%. Last month was also 0.2%. So not really expecting much of an inflation problem with your PPI. Now, PPI versus CPI, what's the difference? CPI is consumer price index or consumer price inflation. PPI, producer price index or producer price inflation. So companies, how much are their costs going up? If company costs go up, they tend to pass that on to consumers. That is why PPI could be somewhat important before we get the CPI report that comes out on Wednesday. Now, at the same time we get that PPI report, we get a speech from Fed Schmidt at 10 o'clock in the morning, and the TIPP Economic Optimism Index. You are expecting optimism to go up a little bit from 54 last month up to 55.1. You will also get a speech from Fed Williams. A lot of people believe Fed Williams is trying to take over Jerome Powell's position in the next 18 months, and he's kind of flipped recently to be a bit of a dove, so watch for that to continue. On Wednesday, CPI. Now, what's interesting about this is you're actually expecting a deceleration of core CPI, which sounds crazy versus what you're hearing out there from big money. You're hearing out there that tariffs are going to be this big inflationary problem, and we're not expecting that, at least for the month of December. Now, again, tariffs are not in effect yet, so that kind of makes some sense. So a CPI report that's really even in line with market's expectations currently would be good. If we surprise to the downside, that would be the best possible scenario of this upcoming week. It would skyrocket the markets if that happens. Now, again, core month over month is expected at 0.3%. 0.2%. That's the expectation. Last month you were at 0.3%. But as I say every time we get CPI, it's not just an even number. It comes in at an actual decimal point. So we could have, let's say, 0.21%. That would be a really low 0.2. Or we could have a 0.24. That would be a high 0.2. And, vice versa with 0.3. You could have a low 0.3 of like 0.25, where it just gets rounded up barely, or you could have a high 0.3. A high 0.3 would be a problem, like 0.34. Yeah, Wall Street probably wouldn't like that too much. Okay, so that's what to be watching for coming Wednesday. Month over month on the headline is expected at 0.3%, unchanged from last month, and year over year CPI is expected to actually rise a little bit from 2.7% to 2.8%. But that big important number is obviously that core month over month. If that surprises to the downside, which I think there's a good chance that it will, we're going to have a very strong second half of next week. And considering how weak markets have been, I wouldn't be surprised in the slightest bit if that is what we get. Now, New York Empire State Manufacturing Index as well will be coming out, expecting that's going to be negative and worse off than last month. Fed Barkin and Fed Kashkari will be speaking at about 9 o'clock in the morning, 9:30 or so on Wednesday after the CPI report comes out. And then Fed Williams will speak at 11 o'clock. Fed Goolsbee will speak at noon, and you do get the Fed Beige Book that will be coming out at 2 p.m. on Wednesday also. So Wednesday's CPI, Fed speakers, Beige Book, a bunch of stuff will be happening on Wednesday. And if there's really one day to pay attention to, it's definitely Wednesday. Now, Thursday's retail sales report will also be important. This is for the month of December. So far, what we've heard from credit card issuers like MasterCard and Visa, numbers for the holiday shopping season look pretty good. We'll see if that gets reflected in the retail sales. We're actually expecting a deceleration from last month's 0.7% down to 0.5%. Still very strong, but nonetheless a deceleration. Export prices month over month and import prices will also affect your GDP estimates. So that is something to be watching for. Initial jobless claims are expected at 210,000, up from last week's number of 201,000. Philadelphia Fed Manufacturing Index also expected to come in negative at negative 8.5 versus last month at negative 16.4. So that would actually be a little bit of an improvement. You will get the Philly Fed data, CapEx index, employment, new orders, and prices paid, with the prices paid component, the inflationary component, being the most important. Business inventories and the NAHB Housing Market Index also comes out at 10 o'clock in the morning on Thursday. Fed balance sheet and a couple other smaller data points will be coming out. Retail sales, industrial production, and GDP growth rate will be coming out for China Thursday, around 9 o'clock in the afternoon or evening. And I don't expect that's going to move our markets too much, but it always has the possibility to to move our markets. On Friday, building permits, preliminary data for December will be coming out, and housing starts will be coming out. For whatever reason, people kind of correlate building permits to actual building of homes, and kind of something to watch for in the inflation picture, right? I understand more homes, more supply, stable demand would mean lower prices, right? It doesn't seem to be that important to the actual inflation numbers, though. So I don't think that's going to move the markets too much, but something to watch out for. Now, with all of these catalysts said and put out there for you, I would like your thoughts on them down below in the comment section. One thing I always want you guys to remember, though, is you have to take into consideration where markets are at. If we're optimistic, if we're bearish, if positioning is, optimistic or bearish or stretched or whatever terminology you want to put on it, does not matter to me. And let's just take note of where we are now. There's 3 indicators I like to look at every day here on this channel. AI investor sentiment survey, very negative. We haven't seen something this negative in a while. We're almost at the 1-year bearish high. Bears are coming in at 37.4%, neutral investors at 28.0%, and bullish investors at 34.7%. That's a not so good number. There's 3% more bears than bulls. Yeah, you're almost never that bearish during a bull market, which last I checked, we're still in a bull market. I think this week is going to really test that if the data comes in bad. Now, the percent of stocks trading above their 50-day moving average at 28%, meaning 72% of stocks are currently trading below their 50-day moving average. Markets historically do not stay this bearish for that long. And you've actually been very bearish now since December 18th, which now is the longest period we have been bearish, really below 40% in years, right? Even back in April of 2024, when you had a 7% correction in the S&P, you were only bearish, like below 40% of stocks trading above their 50-day moving average from April 12th through May 2nd. Now it's been from December 18th. Now it is tomorrow is going to be January 12th, right? January 13th. So you are you're very negative. You've been negative for a long time. You're ripe for a reversal. Now, CNN's Fear and Greed Index is currently at 27. Not too many times again during a bull market do you get down to these extreme levels of fear and just sit there. You can also look at the VIX if you want to look at the VIX. The VIX is at, let's see, where's the VIX at? It is at, give this a second to load here. The VIX is at 19.54. Okay, you're almost at 20. That's rough. And then on Friday, the Russell was down over 2%, NASDAQ down over 1.5%, S&P down over 1.5%, and the Dow as well down over 1.5%. Like, you already just had a really bad day on Friday. It's not going to take a whole lot to give you that upside move in markets. Now, good news is the S&P on Friday stayed above its 100-day moving average, okay? 6 cents above, in fact. The 100-day moving average is currently at 578.48. The low of the day on Friday was 578.55. So you stayed above this by technically 7 cents or so, okay? So that's good, okay? If we fall below this, we're going to have a huge problem. If the CPI comes in bad or PPI comes in bad, the combination of both of those, if bank earnings are not as good as we expect, if TSMC earnings are not that great either, you're going to fall to this 200-day moving average probably this week. That 200-day moving average sits at about 552. If we do hit that kind of low, you definitely want to buy that at that point. That would be down almost 10% of the S&P, and normally you'll want to just shut your eyes and buy any correction or crash that we ever have in markets. Normally, like, that's a good buying opportunity. I think now is a good buying opportunity for the internals of our markets, like the RSP, the average stock out there. But even for the S&P, when it's down 10%, just buy the SPY. That normally, does you well over the following months. So that's the downside scenario. The upside scenario, I think, is potentially getting back to about that 600 level if CPI comes in good. Because, again, everyone's kind of fearing Trump tariffs. They have not happened yet. If inflation is showing progress and, continuing to do so in this Wednesday's CPI report, then that's kind of going to throw a big FU to the inflation bears out there, right? It's going to say, well, inflation is making progress now. How much is Trump tariffs really going to negatively affect that? That would be a huge positive as well for bringing down 10-year Treasury yields that are now starting to approach 5%. We're a jump, skip, and a hop away, one or two bad data reports away from 5% on the 10-year Treasury. That's where things really start to break in markets. That's the big risk-off danger zone. So if we can avoid that, 10-year Treasury yields fall on what I think will be better than expected CPI data, you're going to have a reversal to the upside in markets. Now, obviously, it's not a guarantee that will happen, so keep that in mind. I'm not a financial advisor. I'm not a financial planner. Anything can happen in markets, but I think your odds are pretty good of a better than expected CPI report that leads markets to take some of the fear down. Again, just look at your fear metrics, the 4 of them that I showed you in this video. They almost don't get worse than this, okay? CNN Fear and Greed Index could get a little bit worse. The VIX could spike a little bit more, but I mean, you're pretty damn negative as is. So I wouldn't bet on, things getting too much worse from here. Unless they obviously get much worse from here. Unless there is an inflation problem. Unless Trump comes out January 20th and slaps Mexico, Canada, and China with a 25-30% tariff, then we have a bigger issue on our hands. But until that happens, I think you want to be buying right now. That's just my personal opinion. Let me know what you think about all of this data down below in the comment section. Your opinions on this upcoming week for markets. I would love to hear your thoughts because it's really up in the air. I don't think anyone's opinion is better than the other guys. It's such a wide range of expectations that could happen, or ultimate bottom lines that could come out of this week. So I would love your opinions. Nonetheless, thank you for posting them, and I will see you in the next one.